Welcome to the launch of Bluefin Vision for the corporate consulting business. What better way to start than an interview with Nick Burns. Nick, welcome.
Hi there.
So why don't we begin with looking at how the business has performed over the last 3 months since the launch. What for you, Nick, are the high and the low points?
Well, I suppose it's the high point starts with the brand launch that we had in January, effectively bringing 14 franchises together under one brand. And it was, for those people who attended the brand launch, it was great. Really good messages that we got across. The staging was great. Everyone had a good time. It was a real good platform to launch Bluefin across the piece, but also to launch Bluefin Corporate Consulting. So that was obvious high point. We started a lot of work last year around the structure of our business, and we started to put that structure in place from January. That's been very helpful for the way in which we're taking the business forward, and everyone's done really well in putting that together. The results that we've had for the quarter are equally pleasing. We've been slightly under on our revenue targets, about 2.5% under, but our profit target, we are in fact slightly over on our profit target for the first quarter. So from a results perspective, I'm really pleased. Our margins are about 10% for the first quarter. We need to achieve about twice that as a profit margin for the whole year. So whilst we're on target for the first quarter, we've got some fairly challenging months in terms of our profits for the next 3 quarters of the year. Nevertheless, we set our budgets and we're where we need to be on our budgets, so I'm really pleased with that. We've had some great client wins in this first quarter. Indeed, we've won 35 new clients. So to be winning clients at that level in these very difficult markets is a real testament to the team. And that's not just the sales team, that's the team that sit behind them, the people who look after our clients. So winning clients has been a big part for us in this first quarter, particularly as it's been quite an unsettled period for so many people. We issued our client satisfaction survey during this quarter. Our results that have come from that were fantastic. 8.1 out of 10 was the overall score for our consulting business. 7.55 out of 10 was the overall result for our business solutions business. Our benchmarks are 8 out of 10 and 7 out of 10, so we've beaten both benchmarks. Importantly for me, around 80% of our clients said that they would be prepared to recommend us. So that's a real testament again to the service that we're delivering for our clients. So I'm really pleased with the results. I was less pleased with the response level. I would like to have seen more clients respond. We think perhaps that the survey was maybe too long, and therefore we're rethinking how we deal with this survey going forward, just to get a better take-up from our clients. A lot of the clients would have been the first time they would have received a survey from us, and so we're going to rethink that as to how we issue surveys going forward. Anyway, so that was great. We have had some client losses, which are obviously a lower point, but we've lost 3 clients in the quarter due to poor service, so that's not a good thing. We've lost a further 9 clients who have been through merger and acquisition activity, or indeed closed altogether as a result of the economy. So we're obviously winning more than we're losing. There's not a lot we can do about losing clients if they close down or if they don't make it through the recession that we're in. There's certainly, we can stop ourselves losing clients through poor service, but we have about 1,700 clients, so to lose 3 clients through poor service perhaps isn't quite so bad, but I'd rather we didn't lose any, particularly in this market. An obvious low point for us that we should talk about is the fact that we have been through job losses. I said at the conference in Birmingham that we had a tough year ahead of us. We set our budgets recognising that we would have a tough year ahead of us. Nobody is immune from what's going on in the marketplace. No one. I mean, if you look at professional services firms like Clifford Chance, like Allen & Overy, KPMG, then you look at businesses in our market like Hewitt, Mercer, Origin, Forbes. All of these firms are taking between 10 and 20% of their headcount out of their businesses. They're all finding these markets very challenging, and we needed to go through that whole situation ourselves. It's been very difficult for everybody involved, from making the decisions about taking people out of our business through to the people delivering that decision, many of whom have never had to do that before in their careers, and they have gone about that with dignity and real professionalism. And I know how difficult that has been for them delivering the message. And then, of course, we have people who are receiving the message. And, of course, that's the most difficult part there. For those people who have gone or indeed are going, of course, I wish them all the best for the future. As I say, that's been difficult. It's been a low point, for sure. It's something that we've had to do to get the security in the business that we need for those who are remaining. And also, we set ourselves budgets at the beginning of the year to make profits for this year. And we are seeing pressure in the business on our revenues, and therefore we've had to address, as all of our competitors have had to do as well, our costs. So that's a clear low point. Perhaps the final high point for me was our success at the Corporate Advisor Awards. We won Corporate Advisor of the Year under the Bluefin brand, which was fantastic, and that's something that already we're trading off of, and it proves already in the marketplace that the market started to look at what we're doing. It's quite a unique model in many ways, and I think the term was we're simply the best corporate consultancy in the market, was what the judges said, and I'm proud to stand behind that statement.
So many positives from the first quarter, but a big low point that you have obviously just picked up on, the redundancies, and I'm sure many people watching will want to know and ask the question, are there any more planned redundancies? And also the pay review that you were looking at doing in July, is that still going to happen?
Yeah, I wrote to everybody at the end of last year. The pay review was due on the 1st of January. Seeing what was happening in the marketplace, we felt it was prudent to not conduct a full review of pay rises, and we went ahead and did that, and we said that we would review the situation again at the half year. I said I'd do that, and that's exactly what we're going to do. That doesn't necessarily mean that there will be pay rises at the half year. What we will do is review the position. We'll review the position based upon how our clients are doing, the revenues that we're getting from our clients, the profits that we're making, what our pipeline is looking like for new revenues from our existing clients and indeed new client wins, and so that we can look at the overall stability of the business before we press the button and give pay rises. If, however, all of those areas of the business are where we want them to be, then of course it would be a nice thing for us to be able to give pay rises. What I won't do is give pay rises that will potentially lead to us putting further jobs in jeopardy. I certainly do not want us to go through another widespread redundancy program again in this business, and so we'll be watching that very carefully when it comes to the halfway point.
So stability is the watchword at the moment.
It certainly is. You know, it's been in a lot of parts of the business quite unstable. As I say, we've had 90 people leaving the business. Predominantly that's been in the London and the South East area. It's the part of the business that's making the lowest profit margins. The regions and our business solutions are making very similar profit margins. London, the South East, has been lower in its profit margins. It's where a lot of the focus has been on the redundancies. And I'm very aware it's a very emotional time for a lot of people, an unstable time for a lot of people, and we now need to regroup and stabilise, and that's exactly what we'll be doing.
So, mentioning Bluefin Financial Advice, how are they and the Bluefin Wealth Management performing at the moment, and what impact has the sale of the network had on the business?
Well, needless to say, both the financial advice and the wealth management businesses are finding these markets challenging. It's very hard for any individual to know where and indeed when to invest at the moment, the stock market being as it is. And so as a result of that, of course, they're finding it challenging, as indeed the private client advisors sitting inside Bluefin Corporate Consulting are equally finding it challenging. And so they're kind of behind on their budgets, and it's the same sort of numbers that we're seeing, so, but not too surprising, I think, for us. They are in the process of rolling out Enterprise. And Enterprise is a way of doing business in the financial advice and the individual advice markets. And that way of doing business will bring consistency across the whole of that piece, and will also be ensuring that the private client work inside Bluefin Corporate Consulting will fully engage with that. We're not going to be reinventing the wheel here, so they will fully engage with the whole of the enterprise solution, which includes front office and back office technology, and is very much driving the way in which we'll do business with our clients that fits very neatly with the way the RDR is going. So that's a very exciting development, and as part of that we'll also be seeing a lot of the corporate work that has been historically written in the financial advice business will now follow the processes of our business solutions offering in Swindon. So that's a big step forward too. In answer to the question about the network sat outside of Bluefin when we went through the rebrand, so it wasn't part of the rebrand, and therefore it's a very separate business venture. That's now been moved on, as you pointed out, and it has no effect on what it is that we're doing.
So Nick, we talked about stability being important at this point, but obviously it's also vital that you move forward. There are a number of projects that the board's been involved with. How are they progressing at the moment?
When you bring 14 businesses together into one, and our strategy has been very clear that we didn't want to maintain 14 franchises, we wanted one business, and by having one business that would give us leverage in the marketplace, and obviously leverage therefore for the benefit of our clients. And we're starting to see a lot of those positive signs already, particularly with our client wins and the awards that we've also won as well. However, you can't take 14 businesses and then overnight create one and say that's done. There's a number of projects that need to sit behind that. So to put that in context, one of the first things we wanted to do was get a good understanding of what our clients think about us. That was the client satisfaction survey, which I mentioned earlier. Very pleased with the results, but I don't feel at this stage that I know enough about what our clients think about us because of the actual response rate that we got. So we need to do more work around that to get a feeling for what it is that our clients really think about how we're delivering for them. The other side to that is we have different client agreements that sit right across the business, and a huge project that's going on at the moment is bringing these client agreements together. So we have one agreement, one scope of work, a schedule of fees that our consultants can then work within with our clients, recognising that we have, whilst we can build a lot of this from the centre, clients locally will have a different view to the way in which these are applied, and we're very conscious of that as well, that we want to be able to deliver a lot of this from the centre to the business to then use, and to let our consultants use it based upon what it is that the way they operate with their clients locally. So that work's going on. Practice heads are involved, heads of the teams are involved. This isn't just coming from the board. We always said we would engage the business and the practitioners in the business, and that's exactly what we're doing. Right, there'll be a session in the next month or so which starts to really bring all of that together, and then we can compare what it is that we're going to do for our clients going forward against what it is that we currently do for them now. And there'll be a 1 or 2 year rollout process then to get consistency across the business. Another big project and an important project for us is Orbit. Orbit is, as we have said from the start, our technology, our proprietary technology that we will be using across the whole of the business. Orbit has been through its period of stability now in the last 6 months, retained their clients. They've been doing a fantastic job. But the technology under Orbit, we are investing significantly in that. There are 3 main projects coming out of that at the moment. The first is what's called Employer Zone. This will give much more data to our clients. By using Employer Zone, it will make it easier for us to transport the technology across the whole of the UK. The second thing we're looking at is reward statements, total reward statements, but for us to be able to use those internationally. A lot of our clients are responsible for Europe, Middle East and Africa, and they're looking to see how the orbit can be used, how the technology can be used on an international scale, and so we're developing that. And the final piece with orbit is mobile phone technology. We're currently working on ways to take valuations, pension fund valuations and prompts, and send those instead of to an email address to people's mobile phones. All of that type of innovation will drive Orbit as a technology offering forward, and I will then, by the end of this year and into the next year, be asking the question, why aren't all our clients on Orbit, our existing clients, and why aren't all our new clients on Orbit going forward? There needs to be a big rollout process to go across the whole business for Orbit, because a lot of the business is still unsure as to how it works. That will start in the second half of the year, and there'll be a detailed training program that will give our consultants so much more that they can offer our clients. And certainly when our clients see what Orbit can do, they're going to love it. Another project we have going on is looking at our whole of our defined benefit administration. We've brought an external consultancy in. They have just completed their first report, which looks at what we have today, and they're starting to make suggestions to my board on what our strategy should be going forward. The early indications are that we've got some fantastic people operating in our administration teams, which we kind of knew, and that's great to have that endorsed externally. Equally, it's quite different the way all of the different offices are currently administering our pension schemes, and as part of the process of this admin review, we'll be looking at that to give us much more consistency, but also to give us much better leverage with our clients. So that's progressing very, very well. We also are undergoing a review of our ICP, the investment consulting practice. Our ICP is currently under-resourced. And we have been trying to recruit into that area, and we've been finding that quite difficult actually. But nevertheless, the ICP is an area where we are carrying risk in our business, and it's fair to say that the information that we've got from the business is not consistent for us to understand exactly what it is that we're delivering for all of our clients in that area. So we're going through a process at the moment with the client relationship managers to understand much better what it is that our clients are expecting from us and what we're delivering from us, delivering for those clients. And in that process, we'll be able to then get a much tighter client proposition that will come off the back of it. A really key project also that's been rolling through the first quarter is the transition of our clients to business solutions in Swindon. We have around 1,700 clients in corporate consulting. We've identified about 1,200 of those clients are more suited to that SME client offering of business solutions. Now that number I think will surprise a lot of people, and therefore our strategy of moving these smaller clients down to Swindon so that they can be serviced from Swindon with a slightly different client offering will enable us to really concentrate our efforts on our larger clients. It's also important to recognise that those 1,200 clients generate less than 10% of our overall income. So there's too much time being spent, from what we can see, on some of these smaller clients, possibly at the expense of some of the larger fee-earning clients. And this will unclog the arteries, if you like, of the business and enable us to really concentrate. And this is a very important part of our strategy. I know it's an area that some people have questioned, and that's fine, but it's a very important part, and I expect everybody to really support that move because it will help us to take the business forward. So that's already started, and there's a lot more of that to come throughout the whole of 2009. One of the final projects we've been concentrating on, of course, is training our people. We've said from the start that we want to invest in our people. Whilst we've had to pull back on a number of investments this year, Orbit is an area that we are continuing to invest in because we know that's right for our clients and we know that's right to drive our business forward. We're investing in the work around our DB administration, we're investing in our ICP, and finally we're investing in our people. We have a budget of around £500,000 that we will invest in our people this year. That's already underway. That £500,000 includes quite a significant investment from our partners, what we call our working in partnership partners, and that's fantastic for us. And there'll be more information on how that's going with our working in partnership team. That will come out over the next month or so you can see why our partners want to engage with Bluefin. We've started a program with a firm called Gazing. That's a lady called Nikki Simmons-Gooding. She spoke at our conference. We said at the conference that we would start to roll that out. That's happening. About 40 people have been on that. They are already seeing the benefits of the training that they've been receiving. And we as a firm are seeing the benefits as well, in that as a result of the training that she has been giving, we are already generating more revenues from our clients. Specifically using a lot of the processes that she puts together. The next quarter will see about another 36 people going on the course. We then, at the halfway point, will be rolling out a training program to the whole company and really trying to understand what sort of qualifications a lot of our people have got, the sort of qualifications we want them to have, and the training programs that we believe that they should go on for the rest of the year to enhance their abilities and to develop them. We said that's what we would do, and that investment will continue, and as I say, very much with the help of our WIP partners as well. The final project, there are others, but the final sort of key project for us is around communication. I'm conscious that since for last year, the business was getting a lot of communication from me, and then we obviously had the conference, the brand launch in January, and since then it's been a bit quiet from me, and that's because I've been relying upon my team to be going out and doing a lot of what we've talked about today, and so there's not been a huge amount that I could add during that period, and they've done a fantastic job, and they should be very proud of the way they've gone about that over the last quarter. It's time to kind of step up the communications again now. One of the difficulties with what we've been through in the last quarter is confusion, and when confusion takes place inside a firm, everyone starts to draw their own conclusions, and so we're going to start to up the communications again. It's an important part of it. That starts, of course, with this Bluefin Vision. I will be writing to everybody in the next day or two, perhaps putting a bit more detail on what we've chatted about today, particularly around what's happened in the last quarter. We're also going to be piloting a blog, a Bluefin blog, and that will be not just myself, but I expect other people within the business to be able to send out quick messages to everyone of successes that we've had perhaps around new business wins, successes that we've had around particular work we'll be doing with clients, and so that will be giving good regular updates, and of course there's no substitute for eyeballing people face to face, and so now that we've been through a lot of what we've been through in the last quarter, it gives an opportunity as myself and indeed our senior team to really get back deep into the business with our people.
So exciting times, a lot of work to be done. Perhaps the overall message is stability but not complacency.
We definitely can't be complacent. A lot of people have been asking me about the remainder of this year and indeed into next year. Not only our staff have been asking me, but our shareholders have been asking me as well. The answer is it's very difficult, of course, to be able to predict what will happen for the rest of the year. Depending upon the newspapers you read, some will say the recession will be over in 6 months. I think our Chancellor currently thinks that as well. Others say this could run well into 2011. There's also talk that certain countries will come out of this, don't forget, global recession, and that the UK could be the last to come out. Of course, what it's telling me is no one's really sure. So what we have to do is we have to concentrate on our clients, we have to continue to invest in our people, and we have to continue to invest in solutions for our clients that will help them through this difficult period as well. And in so doing, it will set us aside from the rest of the market, and as we come out of this recession, there's a real opportunity for us to thrive through this. We have a very clear vision in this business, we have a very clear strategy which we're driving through, and we have a strong backer, shareholder in AXA UK. Those three things, coupled with talented people, coupled with ambitious people, and people who are committed to what it is that we're trying to do, will give us an opportunity in this recession that many other firms won't have, and we have all of those things.
Well, that's a great view of where you are and what's going to happen, Nick. You mentioned there AXA. What is AXA's view of Bluefin Corporate Consulting, now that you've, most of the business has been together for nearly a year now?
Yeah, well, we've spent a lot of time during the last 12 months kind of leaving the business alone, but trying to get a handle on it, which has been, I have to say, quite difficult for us to get a handle on lots of parts of the business. But that's starting to come through now. It's fair to say the shareholder, particularly in these markets, are asking far more questions now than perhaps they were at the beginning. And rightly so. They're very interested in our results, of how we're performing. They're equally interested in the risks that we have inside our business. I mentioned at the conference that we've had 2 or 3 E&O claims that have come through. We deal with big clients, and we deal in a fairly risky area with those clients, and therefore we have to be really tight on the way we manage our risks. And it's fair to say we're not as tight as I think I'd like us to be, and perhaps our shareholder would like us to be. So a big focus for everybody will be risk management, and that goes to the simplest thing of keeping very tight records. If it's not written down, it hasn't happened. And so they're looking at that very closely. They're of course very pleased with the results for our first quarter. They're also pleased with the fact we won an award in the marketplace, so that's good for them as well. And finally, they're pleased with the leadership and the clarity around our strategy, which for a big business can often be difficult, particularly for AXA. You know, they have a lot of businesses, and they're very comfortable with our strategy and where it is that we're taking the business, particularly with us, and they now understand us working with employers, with trustees, and of course with employees as well. And that fits very neatly into the Bluefin Financial Advice and Bluefin Wealth Management models that we have as well.
Nick, it's been great to talk to you today. Briefly, what are the key messages you'd like people to take away from this?
The 3 key messages for me would be stability, confidence, and opportunity. Stability because of what everyone has been through. I'm very aware of what everybody has been through in the last 3 or 4 months. We now need to put that behind us and move forward. Confidence in that our people have, despite what's been going on in the last 3 or 4 months, not just inside our business, but outside in our marketplace, we've hit our targets. So we should, take heart in that, and that will also help us to move forward. And finally, opportunity. If you've got a clear vision, if you have a clear strategy and you have a serious backer, which we have all of those 3 things, and if you've got talented people, if you have ambitious people, and if you have committed people, you put all of that together, and that gives an opportunity to really thrive in these markets. We have all of those things, so we have that opportunity to thrive.
Nick, thank you.
Thank you.